Look, it's quite interesting because of the breadth of the proposition that they have, and I think having the choice as a broker as to whether you want single policy wording now or whether you want the choice of many insurers sitting underneath the products and creating your own bespoke product ultimately, I think that is what some of the brokers like, those that get insurance, those that enjoy selling insurance and talking to clients about insurance. And then I think the opportunity to refer as well. So to me, it's that numerous ways of being able to deal with Source, which makes it quite enjoyable.
Yeah, we've been talking all year about trying to be as you could say flexible, versatile as possible, because we've been talking today. Advisors need different solutions, don't they? They don't all have the same process or journey, so we need to be able to offer something that advisors who like to deal with their clients face to face or over the telephone can work with our technology. If you're looking at consumer duty and you really want to start doing more general insurance, but you don't want to get your hands dirty, to use a phrase, you can refer and make it nice and easy. So we can hopefully continue to do. Create ways of making it easy for advisors, and we'll work with you guys to make sure that they're delivered.
It's the choice. It's offering the advisor the choice of whatever route they want to do and whatever type of depth of advice they want to give in the insurance market that I think works well.
We've always had a really good affiliation with directly authorised advisors. There's a lot of pressure on DA advisors these days to make sure they're getting things right. We've seen the regulator introduce more legislation, more sort of rules around consumer duty. We've seen lots of different types of technology available to advisors. So, if you're a DA, you've got an awful lot of options. So, we're one of those options. We want to make sure that we integrate with the right businesses and work with the right advisors. It's important for us because there is that flexibility in the market. They can choose what they want, and that gives us the need to make sure that our proposition is as compelling as possible to set ourselves apart from our competitors. That's part of the reason we really think, and obviously working with clubs, DA clubs is a key thing for us, I should always say.
Of course. But I think you're right. I think the consumer duty bit has been a key bit for us this year. I think we have to be careful that anything that we want to put out to an advisor market, we don't try and shoehorn into consumer duty. But I think general insurance and protection across the piece and the insurance across the piece is quite important, of that consistency of approach, that consistency of advice, and what an advisor and an advice firm does is really important. And I think consumer duty is bringing that clarity to the market. If you look across the market, we're probably as an industry probably about 23-24% average of penetration rates on mortgages to general insurance. Have that other 75% been offered it and declined it, or has just a certain percentage been offered it and declined it, and the others it hasn't been spoken to? I think what consumer duty will do will mean that consistency has to happen across 100% of those conversations, and I think an advice firm has got decisions to be made as to, do they carry on giving advice or partial advice to a percentage, or do they actually say, no, we're not going to touch advice, we're going to refer it, and then 100% gets referred, so that each customer that goes through that brokerage gets the same process, the same journey, the same choice. And I think maybe even to the point of, if an advice firm doesn't want to do GI full stop, then they should consider deauthorising that permission, because the regulator is starting to look at that and make sure that people who aren't using permissions, they are asking them to either deauthorise or give a good explanation of how they're keeping up to date with all the regulation and the processes to be able to advise on it at that point. And we're seeing it in secured loans, we're seeing it in the extra release market as well. So I think that choice element of what do I do is really important now, but it's got to be consistent. I think the barriers to GI is time, as always. I think it's time and knowledge. We always get that. The mortgage market, we think it's quieter because volumes are slightly lower, but I think with the mortgage charter coming in and advisors now being able to help customers with their product changes, so especially on a product transfer or remortgage, it's 6 months in, booking a product, and then probably reviewing them every week, every fortnight at the moment, because all the big lenders are changing prices every week. So that's multiple times that something is being reviewed and checked, whereas I think historically it'd be in once, it'd be done, It would be there 3 months before, and a product transfer would happen. So I think whilst the market is slightly quieter with new business and the purchase market, that part of the market is still keeping everybody busy. So again, making sure that they can help a customer get the best rate is probably going to save them a lot of money than helping them with general insurance, unfortunately. And it's how do we actually help them manage that time and manage the knowledge gap if there is one, or the process gap if there is one, to actually be able to do both. And back to the previous point, give the customer the best experience and the right process.
Yeah, I think I can certainly say that rings true in all the interactions we've had with advisors this year. You know, dealing with clients, a lot more touch points with one client than they might have done, you know, a couple of years ago. So general insurance protection is going to be affected by the capability they have to spend the time speaking to clients about those new business opportunities. So really for us, is the technology easy to adopt, so that if you are limited with time and you want to start writing general insurance, well, I can just adopt a new system really quickly. Whereas you've said in the referral space, if you are spending all your time doing, you know, dealing with clients on the rates, you know, different types of conversations than you would do at a new business opportunity. If the referral option is easiest, then, you know, surely you should be able to adopt a piece of technology that's really easy to integrate into your process. And I think with SourceGo we've done that. So, you know, we've spent a lot of the time this year listening to advisors. We obviously launched the Advisor Insight Forum, which is all about listening to people that work with us, people that don't work with us, about what they need. And you know, what we've done with that information is feed it into what we've done with Source 2 and, you know, with SourceGo. So hopefully in 2024 we'll see that start to filter through in line with those changes from Consumer Duty to make, you know, sort of a mixing pot of, should be perfect for advisors with their options for GI for next year.
And I think for me, the area we've spent as an advice community the last 12-15 months trying to help customers with the impact of what's happening with rising mortgage rates and people coming off, you know, 1.5%, 2.5%, 3% up to 5.5%, 6%+, and that's a tricky thing. Whereas for the last 10 years we've been talking about, you know, rates always coming down, or it's a cheaper rate, or very similar, and what do you want 2 or 5 year. Now it's very much how can we help minimise that impact of rising rates. But I think we need to be aware that that's just starting to happen in the household market as well. Rates are rising and premiums are rising in the household market. So again, whilst it's an opportunity, but it's also a challenge at the same time, is how can we as an advice community help the customers in the general insurance space as well mitigate the increase in rates. And again, whether it's refer or do it yourself, using those panels where people can actually look and help, it's got to be better than sending them to Compare the Market or any of those sort of aggregator sites and letting them work it out themselves. Yeah, so if you look at the mortgage market for 2024, we've just seen recently the figures from UK Finance with their estimates for this year, about 450-ish billion of completions, whether that's product transfers, new business, remortgage. They're predicting that could drop to about 425 billion next year, which is a challenge, but it's still going to be one of the biggest markets. So I think we also have to be aware that the last 3 years have been slightly abnormal in the volume. So they're the 3 biggest years we've had since 2006. So yes, it's going backwards, but it's still probably going to be a bigger market than it was in 2018, 2019. We've just got to be mindful that what's happened to cost bases, what's happened to procuration fees on product transfers, the way the market is. So there are challenges out there, and for us that's how we work with our firms, is how can we actually help them generate more business, how can we help them deal with more customers and deal better with their existing customers, talking to their client bank. And with the use of technology, we're part of the Fintel group. We're very much into that technology journey. We're always looking at how we can actually help improve that, whether it's in the mortgages space, whether it's in general space, whether it's in IFA space. So across the business, we're very much focused on that technology journey and using technology to do the heavy lifting, not to replace the advisor. What we say is wrap technology around the advice process, give the advisor more time to actually do the advice, the bit that they're good at, the bit that they charge for, and don't be afraid to charge. Your knowledge and your experience is what they're coming for. Mm.
Well, we always look to support SimplyBiz in advisor engagement, and it's important for us to really get the feedback and insight from SimplyBiz advisors at their events, at various opportunities, whether it be online or telephone, whatever. So we'll continue to do that. We'll make sure that we support the roadshow. We'll make sure that we support some online events and those sorts of things, and really just try and work with SimplyBiz and a good sort of cross section of their advisors to understand what's best for our proposition and how we build it. So I think more consistent collaboration is what we'd like to do. We'd like to work with SimplyBiz to ensure that the GI proposition and their panel continues to work in the right direction. Really work on making sure that what we've talked about today in terms of advisors being able to have the right options when there is pressure in the market. We need to make sure that the messages are coming through not from only our channels but via the SimplyBiz channel as well. So that the message is clear. We're here to help. There's a number of ways we can help, and if it's not just about income for the advisor and making sure they tick a box, it's about the right client outcome. Considering where the market's at in terms of pricing, in terms of aforementioned consumer duty. So that's what I think we'd like to do. Just make sure that we strengthen the relationship and continue to support and hopefully innovate in the ways we do that.
Well, okay. Well, that's all our questions, but I do have you to tie up with a summary. So.
Yeah. Okay. Just a final note from us to say thank you very much for watching, and it's been an interesting year. I think we're going to face interesting challenges next year. God knows, we're all making predictions, but everyone was making predictions last year, and we've seen how some of those have panned out this year. So we've got to be prepared for the challenges. But massive thanks to Martin for coming in to do this with us today, and looking forward to a good 2024.